On Business Incorporated today. In this Yuletide period, rising prices hamper Christmas celebration in Nigeria. And Algeria sets reference price for oil at $60 per barrel. Kenya Airways debt to airport authority increases to 4.6 billion shillings in 2022. Thank you for joining us on Business Incorporated. I'm Will Ibong. Let's get the show started with market numbers. Most markets are closed for the holidays. However, the exchange in Egypt is open, is trading currently now at 1.17%. At intraday, very strong number we're seeing there now. We move over to the Middle East, where we see mixed sentiments in that space. The Abu Dhabi is trading down now at 0.6%. Dubai's index is up, however, to 0.26%. Or flip over to the other side of that counter, we see Saudi Arabia up 0.09% and the Qatari index down well in the red territory by 1.23%. Now, many European countries are at home this week, especially for the holidays, but also because they are sick. Flu cases continue to rise, joining COVID-19 and other respiratory infections. A new estimate by the German research announces that this flu season could cost Europe's largest economy 40 billion euros, mostly in missed work. Deutsche Welle's Stephen Beardsley joins us from Berlin with more details. Stephen, $40 billion, could you put that into perspective for us?
Well, the past few weeks have been difficult here when we look at illnesses. COVID, of course, COVID-19 still in circulation, even though the severity of the current variant is rather low. We've also seen a lot of cold viruses that have really taken over this winter. Many of those made much worse by the fact that exposure for the past few years has been limited due to COVID measures in place. So we're seeing, especially amongst children, that there's a high level of infection and that hospitals are seeing heavy occupancy because of that. Now, on top of this, the flu virus, the flu is getting started at a much earlier time this year than it has in years past. And that's really the departure point for this study from the Kiel Institute for the World Economy. It notes that in recent flu waves that have been pretty bad, pretty much all of them have begun early. In fact, at the end of the year, that is the beginning of the winter, at the end of the preceding year, that's when you can really see some severity. Now, it looks at the last serious one was 2017, 2018, and it's saying that what we're seeing right now is that not only is this flu wave right now beginning earlier than that one, but infection rates are 50% higher. So what it does is it estimates that the infection rates remain that high through about the middle of April. And that is the normal duration of the flu season. If that's the case, this study assumes that as many as 650,000 cases could occur in total, and that would be almost double what we saw at that really the last bad wave in 2017, 2018. That could lead to a lot more employee sickness and then a fall in productivity of 1.2%, and that equates to about 40 billion euros. Now, of course, this is a large estimate. It's hard to really put exact numbers to it, but based on how early this flu season has started, this is how bad it could be, according to this study.
Stephen, we wouldn't want to be sniffing during Christmas and under the tree where we have our Christmas presents. But what kind of measures are employers or governments taking to get through this?
Well, we talked about this not long ago, that the trend here seems to be more about removing regulations, and many of those, of course, in place from COVID. Now, that is for both employers and regulations put in place for the general public. For example, we're seeing that more German states are doing away with isolation periods for those who are infected with COVID-19. We're also seeing that employers are reducing measures such as masking requirements inside. They're pulling down barriers between desks, things like that. And we know that there's a general desire from the public to move away from these measures, so that even as sickness has increased in recent weeks, we've seen a continued demand for COVID measures to fall away. So I think what we're likely to see is that that demand will still be there, but it will be interesting as the flu season really bites in, depending on how bad it gets, whether there will be new calls for more measures. What we could see is that there are new calls for masking, for example. In some places like Berlin, the masking requirements, for example, in the metro have not gone away. Perhaps those could stay longer if it's a really bad flu season. We could see employers grappling with how to respond to this, especially as they see more and more employees call out due to sickness. But it looks like so far it's likely to be voluntary masking. And then the author of this study, the Kiel Institute study, recommended that more employees consider home working options for their employees. And I can imagine that's likely what we'll see. Whether legislators will then wade in and pass requirements, that may depend on how severe this coming flu season really is.
Okay, working from home will seem to be a trend now. Now, away from that, European markets are closed today, but what can we expect for the rest of the week?
That's right. Really nothing to report here in terms of European markets. They're all closed today for second day of Christmas or Boxing Day, depending on what nation is celebrating. What we can expect for the rest of the week, which falls right before New Year's Eve, is there's probably going to be lower trading volumes. And then, of course, there's this big question of whether there's going to be a late December or Santa rally, which normally takes place this year, if it takes place at all. The question of which direction December is ultimately going in, because December has been a pretty bad month, all things considered, for exchanges around the world. Some analysts point out that when December is bad, especially late December, that tends to point to real structural concerns that will continue into the next year. And that big concern, of course, here and in many other exchanges would likely be the rate of inflation and the rate of interest rate increases. That, of course, is why all eyes are on Washington for every bit of new consumer data that comes in, for inflation rates, things like that. So there still is concern here that because the American economy has done so well, that means that the Fed, the central bank there, is going to continue to raise rates at a very high rate that eats into business profits. And then we see that concern ripple across exchanges around the world. Now, here in Germany, there was a light positive uptick on Friday trading. We'll see what happens this week. But again, volumes are likely to be light. And there's not a whole lot of market data that's going to come this week that could swing things significantly one way or another. So it's likely to be that Santa rally is going to more than likely not take place this year, but of course things can change.
Thanks so much, Steve Beasley, for your update, and enjoy the rest of the holiday. Now, all other major markets in Asia, US and the UK are closed today for the holiday, and still in the holiday spirit, preparing a pot of fried rice, which is a basic in Nigeria. The Yuletide is costing more than 50%, more than it did about a year ago. Now, our correspondent, Ini John Mekwa, visited a vegetable market in Lagos, southwest Nigeria, and this shows that the supply of fresh vegetables is not in short, but the disposable income has been affected by global headwinds. Let's take a look.
The vegetables are fresh, but the prices are not as fresh as we think. Compared to last year, the price is not really that outrageous, but it's obvious that generally the price of things in the markets is on the high side. The inflation is just too much. The poor cannot really afford, like we used to come and say, okay, maybe 200 naira or 500 naira can just buy something to make fried rice or salad. You can't get that again for the now.
So last year, this time, I'm sure you cooked a pot of rice in your house. About how much did it cost, and how much does it cost now, this year, 2022?
Well, it's like 3 times the normal price. Because for the bell peppers that we usually buy, you buy for 100, 200. Now it's a bowl for 500, which is not like we used to. So if you hold 2,000 naira, you can't really buy something that will do maybe for, say, a family of 7, like a get-together. It's not possible any longer. Unlike before, if you come to the market, salad shop like this, fruits and vegetables, you'll be smiling with 1,000 naira bag worth of, fresh vegetables.
Would you say that has stopped you or any other person from cooking a pot of rice at home at Christmas?
Well, it hasn't stopped any one of us, because life continues. So we just struggle the little we can. We make our family understand that we need to just celebrate and make do with what we have.
The rising cost of goods is definitely biting hard into the economy all over the world. Economies are feeling it, citizens are feeling it, and families as well, which is evident in, we've seen the price of food items, transport, and even gift items being dampened, even dampened the excitement of the festivities. And this is one of the observations that was made after our business correspondent, Laddie Williams, spent a couple of hours with the Oyewole family in Lagos, southwest Nigeria.
Hello.
It's Christmas, a jolly season, a time to give gifts and enjoy time with family. And the Oyewoles were gracious enough to let me into their home to get a feel of how the average family feels about Christmas this year with sky-high inflation.
Quite an incredible season, and it'd be nice to visit beautiful families like
2022 was a tough year for businesses in Nigeria, and I spoke with Mr. Oluwaseun Oyewole, a serial entrepreneur and CEO at Aaron.ng, a logistics company in Lagos, about how his business fared this year.
Particularly in Nigeria, because of the peculiarity of our country, it's been a tough one. Let me be honest with you. Business-wise, we've had to make some tough decisions, especially as it relates to our spending. So we've made a lot of adjustments as far as spending is concerned and budgeting and all of that. So, we have a shrink budget, in 2022 compared to even 2021. So it's been really tough. I tell you, we reduce our staff strength, staff capacity by all standards. I think it's to about 30%, from what it was in 2021. We reduced our staff strength, and just to be able to cope with the reality of things. We couldn't do a pay cut, because already, what the staff were earning, or what they were earning in 2021 is not even enough, to cope with the high inflation rates, in the current year. And so we felt as a business it would not be fair to cut pay when what they're currently earning is not even enough to cater for for their needs. So the best we could do was to lay off. And as a matter of fact, we needed to even slightly increase and then introduce some little allowances, just to be able to cope with the for them to be able to at least cope with the inflation rate in the country. So it's been tough as a business.
With rising food prices in Nigeria, Mr. Oyewole talked about home budgeting, as Mrs. Oyewole was unavoidably absent.
On family front, we also have, things, we made some adjustments, tough ones, but then, especially in terms of what is it called, grocery, I thank God I have a wife who is pretty understanding, and then who could actually, manage things. There are things we could not change. For instance, the kids' school fees. Their schools increase their and education is primary, so that's you can't touch that. But the thing we could touch, we could adjust. We made adjustments on them, especially at the home front. But then it's been tough, and we're here still standing and hoping that things get better in come 2023. So it's been tough. That's just what I can say. But hey, with positive mindset, either on the front side or on the side of the business, and also on the family side, we're still standing, and by the grace of God, we're here.
Thank you.
Apparently, the kids are good at playing chess, so I got them to teach me a few moves, and they told me how they're spending their Christmas.
Last Christmas was fun for me because I had just come out of secondary school, so I was very happy. But this year was really stressful for me, so I'm not really as happy as I was last year. I'm hoping to go out to my family, my siblings, because I didn't spend time with them this year, so I'm hoping we'll spend more time together. together this Christmas, my mom, my dad, and see some other friends I didn't see this year at all. Yes.
As 2022 winds down, it is hoped that businesses and households have it easier in 2023 and we can truly have a white Christmas.
It's still a Christmas, nevertheless. After the break, more stories from the African continent. Do stay with us. Welcome back. Now, Ghana has exempted pension funds from a debt restructuring exercise which is currently undergoing, bowing to pressure from unions which had threatened to strike in a bid to preserve their members' savings. Authorities and the country's biggest labor group, Trades Union Congress, announced the decision late Thursday last week following meetings that had been reached, that was aimed at reaching an agreement. Now, the indefinite strike was meant to start from December 27th, that's tomorrow. And for more insights into this, let's talk to Professor Williams Pepper, Associate Professor at Andrews University, USA. Now, Professor, it's good to have you on the program.
Hello, good afternoon.
Prof, the government...
Can you hear me?
Yes, I can hear you loud and clear. The government has just exempted pensions from the debt restructuring process. Now, what significance do you think this would make in the scheme of things, seeing that the pension funds hold about 5.5% of domestic government bonds?
Thank you for calling me this afternoon. So the impact is that government will not be able to achieve its set target, be able to get to debt to GDP by 55%. This means that going forward, maybe within the next 2 years, government may have to revisit the debt restructuring process Ghana again. So government will have to be looking at interim debt restructuring process to be able to do the debt restructuring the local domestic bonds in bit-by-bit basis. The other impact is that government may be also be doing what we call lending in arrears. That is accepting that they will accrue the interest which are due to pay to these pension funds. Then in the near future, after 2027, they'll be able to receive cash.
Okay, Professor, we saw that individual investors were not initially a part of this domestic debt restructuring, but it appears that right now they've been included. Could it be the result of the exemption of the pension funds from the program that has triggered this?
During the meeting that the government had with all the parties involved, especially labor union and then the bank, they argued on the line of equity. So that is why government is bringing them back in the part of this domestic debt restructuring process. And indeed, within international standards for debt restructuring, equity is very key, and it helps for parties to be able to accept the process. It might be not said that individuals' investment in the pension fund, in the government bonds, are not so much in Ghana. Most of the parties involved in the government bonds are institutional investors. Because to be able to invest in bonds in Ghana, you need about 50,000 Ghana cedis, which is to say for about $5,000. Not so many Ghanaians have that kind of money. But to ensure that equity is put in place, that is why during that meeting it was discussed that individual investors should have to come in. Well, it must be noted that it is going to make room for the exemption of the pension funds in the process, but it's not going to be too much. The individual portfolio in the pension fund in the bond market in Ghana is not very significant.
Okay, that seems to be some sort of relief. But what other exemptions should we expect, Prof?
I mean, with the new reports, new terms that government has come out with, which look like an agreement between the banks, insurance firms, trade union, Congress. I'm not sure government will be coming out with any exemptions. In the new reforms, government has accepted that after 2027, they will be paying yearly interest. In the past, this was not so. Interest were going to be paid in an interval of 5 years. But with this new terms, the government is going to pay yearly interest after 2027. Also, bonds that are due in 2023, government is going to accept interest payment, but they are going to be accrued or deferred into the future, which I'm sure goes well with all the parties involved in Ghana. So we are not expecting any new form of exemption to come, because now it is certain that all the parties who are involved in bond market in Ghana are okay with the term that government has given out.
So what would a delay in getting the $3 billion loan that the IMF is going to give out to the country in general mean for Ghana's economy next year? Can you paint a picture? A quick one, Prof. Thank you.
It's going to be very, very serious. It's going to be very dire. Currently, the Ghana government, if you look at the books as reported by Bank of Ghana, the dollars available to the country is about $500 million. And normally, the trend is that the first quarter of the year, you will see demand for forex going up. And also government bills or bond bills, which will be due in the first quarter, are very huge, about $663 million. So any delay coming in from IMF not giving us this particular dollars is really going to affect the country. What we really need is a balance of payment, lack of dollars in the system. And that is why we are going to IMF to get some kind of support. The hope is that Ghana will deepen its trade so that we'll be able to get in foreign currency. But for now, IMF is our best bet to be able to give us dollars in the first quarter of the year.
Thanks so much, Professor Williams Pepper, Associate Professor of Finance at the University of Andrews University in USA. Thank you so much for joining us on the program and sharing your thoughts with us. Now moving on to other stories, Algeria set the reference price for crude oil at $60 a barrel through 2023 to 2025. This comes after the approval of the 2023 budget by the Egyptian President Abdelmajid Tebboune. However, the budget set the market price for crude oil at $70 a barrel during the same period. Further, the president has stressed the importance of raising gas output in order to boost exports. Over to Kenya, where airline company Kenya Airways debt to Kenya Airport Authorities, KAA, is on an uptrend. According to latest reports, debt owed to the KAA has reached 4.62 billion shillings, revealing an increase of the airport's used debt by 377.55 million shillings as of June 2022. The amount constitutes 40% of the 11.64 billion shillings that the state airport's custodian is owed by other enterprises and airlines that operate in facilities such as Jomo Kenyatta International Airport, Moi International Airport, and Kisumu International Airport. Now, the Central Bank of Egypt, as CBE, has ordered banks to remove the recently announced limits on overseas cash withdrawals in foreign currency. The CBE ordered banks to remove maximum limits on credit and debit cards for customers who require foreign cash overseas for medical treatments or education purposes after they submit documents disproving their claim. The CBE also ordered banks to remove limits on bank cards for those who travel before the announcement of the latest restrictions on December the 22nd. The CBE also affirmed that the latest restrictions do not include customers whose accounts are in foreign currency or cardholders who make purchases using their foreign currency accounts. Last week, the CBE announced new restrictions on foreign currency withdrawal overseas as the country struggles with a shortage of hard currency. And that's it on Business Incorporated. Do join us tomorrow for another edition of our program. I'm Will Ibang. Happy holidays.